Part of our strategy, we've been on this journey now for some time, elevating the business, and it's all been about diversification, going from just a sports retailer into premium and luxury, diverse in our proposition for the consumer so we can be more resilient no matter what the economic environment is like.
Yeah, and I get that, but Sports Direct is where your core is. I think it's still circa 52% of the revenues, and it's moving ahead, and the stars are aligning as this piece of copy I'm looking at says, for that side of the business. Other parts of the business, are they struggling a little bit? Game UK, Studio Retail, your stake in Hugo Boss. It's a bit more troubling elsewhere in the retail arena, isn't it?
Well, we remain very optimistic about our strategy. Sports Direct's doing very well. Our brand relationships, especially the sports brands, are at an all-time high across various different price points. We're launching with new brands such as On Running and the North Face for the first time in Sports Direct's history. So yes, sports is doing really well. Game is coming through a console cycle last year and is a planned decline, and multiple other acquisitions which we're integrating onto our platform is a planned decline for profitable growth. We've really focused on profitable underlying growth for the business, and that's really where the focus remains.
And I get that. And look, it's exciting to watch. I've got to be honest, Michael, watching where you're going to go next is always fascinating, where Frasers Group pops up. You are the second largest holder in Hugo Boss, for instance. Hugo Boss has just had another horrible set of numbers as well. You've had your run-ins with the city yet again over the derivatives contract, and we don't need to rake over the Morgan Stanley dispute anymore. But what I really want to know is, are you going to up your stake? Is there a good opportunity now, given that Hugo Boss is having such a tough time?
I love the Hugo Boss brand. I think the management are fantastic. I think the Claim 5 strategy, which they're driving, is the right strategy. And I remain very supportive of Daniel and the team.
Michael, there is a problem, though, when it comes to demand that we're seeing for luxury, and that is from the high end, the mid-price end to the lower end of luxury as well. What sort of promotional activity are you seeing in this area, given, Sports Direct has been one of the biggest promotional activity companies on the planet? What are you seeing at the high end, though? Is it requiring more promotional activity to get some demand back?
There's no doubt the luxury environment is under pressure at the moment, but these are some of the biggest global brands in the world, and they're cyclical. They've been around for decades, and we've got a very well invested platform in our flannels business. We've invested in all of our stores over the last 5 years, and we're in a very strong position to capture the demand of consumers as and when it comes back for the luxury market. So we remain confident, we remain optimistic that luxury will return in the medium to long term. We are best positioned to capitalize on that.